I was at my own writers group a couple months back, and I was reading them a chapter from Business Tips and Taxes for Writers, or maybe it was before it was published for critique purposes. And it was about this, forming what kind of business structure should I be. And one of the authors, she was brand new, first time to our writers group, told me that her writing business is a corporation. Oh, that's a little odd, because they're very complex business structures. But okay, now I knew she was a self-published author, wrote her first book, and it was a memoir. And I said, why'd you become a corporation instead of some of the more simpler tax structures you can pick from? She says, I don't know, my CPA and attorney just set me up that way. And now I'm really worried for this woman, because you have two professionals. She's probably spent a lot of money, and she's a corporation as a self-published memoir, one book. It didn't make any sense at all. So I started asking a few more questions. The CPA in me is going, what's going on here? Finally she says, oh, they just set me up as an LLC. Okay, back up. It's not the same as a corporation. And here's what I want to show to you in pictures. If you called the IRS and said, I'm a writer, or my CPA set me up as an LLC, what tax form should I file? Yeah, the IRS would say, I don't know what you're talking about. We don't recognize LLCs as a tax status. The IRS would say, you got to pick from one of these three. Okay? Sole proprietorships are like single family houses. Very common. We understand those. Sole proprietorships mean one owner. Now, you might call yourself a freelancer. You're a sole proprietor. You might call yourself an author. You're a sole proprietor. That's the term the IRS would use to describe you. Freelancer, independent contractor, writer, author, all those in the IRS's eyes mean sole proprietor, one owner, like a single family house. Okay? Duplexes are like partnerships. More than one owner in the same building. I say partnerships are just like living in a duplex, a little too close for comfort. Partnerships are like being married, but you're not in love. They are fraught with a lot of problems because you have tied yourself, business and money, income, and debt to this other human being. And they could incur debt, just like the neighbor in your duplex could ruin the front yard or destroy your property because you're living so close to them. So I almost always tell writers, don't go into partnership. Okay. So this woman in my writers group, Connie, it's not her real name, but that's what I'm going to call her. She tells me she's not a sole proprietorship, she's not a partnership. She says she's a corporation, which would be like an apartment complex. Many owners. Usually they're called shareholders, right? Procter & Gamble is a corporation with lots of shareholders, lots of owners. That's why I thought that doesn't make any sense at all for her. It's a very complex business structure. You usually only do it if you have employees. There is a type of corporation called S corporation, which can have one owner. But usually you're only going to pick that tax status if you're making serious money. If it is your full-time job, and serious money, I mean like $50K a year. Okay? Because that's when you're going to start seeing tax advantages from that corporate status. So I'm thinking, what on earth is this woman talking about? She was talking about this one. Limited liability company status. Heard of that? LLC. Very popular. Only became legally possible in all 50 states in the 1980s. Used to be that in order to get what lawyers called limited liability, you had to be a corporation. And so, or this S corporation was like a small corporation. So small business owners were. Then in the 80s and the 90s, this thing called limited liability company status came about. And it was a good thing. It's a very good thing. Okay.